NVIDIA saw a $924 million dark pool print on Friday. This is a very unusual print. I actually can't remember the last time we saw one almost $1 billion in total premium. So this has definitely caught my eye this weekend and is why I wanted to look at NVIDIA's chart. That's what I'm gonna do today, as well as go over QQQ, because if you remember in our last video, we actually had a major break to the channel that we were within before. It broke out to the upside, and not only to the upside, it actually broke out all the way past where the previous all-time high was. So I'm going to get into that in a second, but going back to NVIDIA right here, technical wise, we had a breakout last week on the daily candle post CPI. You could see here on Wednesday, there was a breakout of this very simple downtrend trend line here. You could see it goes from the high we had in March down to the lower high that was formed over here end of March, and now we just broke out from it. However, on Friday, something interesting happened, and we saw some downside to close the weekly exactly on this trend line. That is very critical, because if you go to the weekly chart here, if we were to have a weekly candle that closed back above this downtrend, that would warrant a breakout, just technically speaking, of course, but that would warrant a breakout back to all-time highs, potentially even further past all-time highs. Because that didn't happen, there now is a little bit of a unknown going forward from here, because we didn't have that confirmation, but also this wasn't just a hard rejection and straight down from this downward trend line on the weekly either. So it really is in the middle. It's about in the neutral zone, which brings a very interesting point to this week because of where we saw this print hit. You can see the spot on this was 924.79. If we go over to here, of course, that is the closing price from Friday, and that again is right on this downward trend line, like literally exactly on the trend line itself. So going into this week, if we were to see a break back higher where this bounces from this trend line, that would be bullish in the most simplest term. I'll get into more specifics here in a second. But if we see the inverse, a breakdown below where we saw the low on Friday, below roughly 918, it can get below my small blue box that I have here, we can see a lot more bearish activity. Now, going into the specifics, if we were to have a bounce of some form, let's say tomorrow on Monday or maybe even Tuesday, for some continuation up from this trend line, a valid trade setup is a possible inverse head and shoulders pattern. And what I'm looking at right here is a possible left shoulder here, the head, and then the right shoulder somewhere around this 930, 932-ish range, which would be an amazing load spot for longs because of a couple things. Of course, first of all, we have a successful bounce from the retest of this downward trend line after breaking out on Wednesday of last week. That's the first thing that shows that it's supported if we do have that bounce here. But then also, of course, an inverse head and shoulder pattern is very bullish. And then on top of that, risk can be mitigated substantially, because if you add, let's say, around 930, 932 for a right shoulder here, your risk in this case would be around 923 to 921. All things considered, $10 of risk, roughly speaking, compared to way more impossible reward, because I would target 950 plus on NVIDIA if there is a valid inverse head and shoulder pattern. That's not bad risk to reward in this case, because again, you can look for 20, 30 to the upside versus that 10 of risk. You also technically could use even less risk and basically take an hourly close back below where the previous shoulder was, so roughly a 929. If you see an hourly close back below 929, then that could be invalid of the inverse head and shoulder. Again, we're theoretically talking about a right shoulder here, and I can draw it out just to give you guys a better sense. But basically, some type of a bounce, let's say to around here, maybe even goes a little bit further, and then we have some type of a drawdown to make that right shoulder that I was referring somewhere around 930, 932, and the invalidation would be a break below where the previous one. This is the micro invalidation, we'll call it. So an hourly close back below here would invalidate this inverse head and shoulder setup. If you want to look at the more short-term movement, personally, for a higher probability of success, I would recommend, at least this is what I would do in this case. You can choose accordingly with your own trading strategies, but I would do something like a 15-minute close below, let's say 923, which is this downward trend line. If we fall back below there, then that would highly likely invalidate this entire setup, because of course you'd be way further down from where the right shoulder should be of an inverse head and shoulder, and then also you broke down below the trend line that was supporting it in the first place. So I like this this area around here as the best risk. And otherwise, as long as it can stay above, then we can see it continue up a lot higher to the 950 target that I spoke about before. So that's just what I'm looking at right now. Of course, it'd be great to see this backed by some type of bullish flow. We saw a lot of rolling orders from last OPEX on Friday. So these are pretty far in the money, and these are being rolled to the June 21st expiration. So nothing too insane that we saw throughout Friday, at least to the bull side, just because these really aren't that bullish of orders. They're just super far in the money. We did see some other prints throughout the week that were very bullish, but I would like to see that theme continue, especially coming off of a trend line such as this, plus the fact that we had the extent of almost $1 billion dark pool print right on that trend line. So this shows that either there's someone very interested in buying up here or very interested in selling as well. Of course, with dark pool, you don't know the exact intent, but you can use it as a tool to base some type of risk or potential trade setup off of, which of course, this just shows the extent and the importance of this trend line. Hence why I like my risk being around there. So that's what I'm looking for the first thing for this week. And NVIDIA is of course a tech stock. And speaking of tech stocks, we do have a QQQ to look at here. Major breakout last week. If you remember, I spoke in the last video about the channel. I characterized it to be a bear flag for a potential breakdown, but of course we want to see confirmation of either break, which could include a breakdown, which is personally what my bias was and what I was looking for. But of course there could also be that breakout to the upside. In this case, we had that breakout to the upside. Not only that, like I said earlier in this video, we had a breakout past the previous all-time high. So that's actually very bullish that we saw this happen here post CPI. And it didn't only just hold for the daily candle, it held for the weekly candle as well. And if you remember what I talked about from NVIDIA earlier, the weekly candle is very critical, especially if you have a break above a key level. And of course, that key level in this case here would be this previous all-time high that we have right over here. So a weekly close above there shows that bulls are continuing to support this and invalidated the huge downside candle that we had before in April. So complete invalidation of that. And that shows me, at least, as long as weekly candles continue to close up here, that these dips are highly likely to be bought, at least in the short term. So that's something that I'm looking for this weekend, is why I'm more confident looking at the bull side for NVIDIA, assuming of course that it can bounce off the trend line I showed you earlier. But as for dip buys for QQQ, again, your bull bear bias going forward should be over roughly this 446-ish level, 446-ish mid, where this gap is. If this gap closes in the near term, then that can lead to a lot more chop, potential of more downside and chop in this wide range. I know it's not necessarily chop if it's within a $10 range. It's kind of like wide price swings, but for all intents and purposes, there's going to be no trend established like we have right now in a clear uptrend. So you do want to see, at least if you are bullish, you do want to see us hold above this gap here. Otherwise, as long as we can remain above here, these dips are likely to get bought. We saw a little bit of that on Friday. I would not be surprised to see this zone get retested, because typically major breakouts like to retest the breakout zone. And of course, that zone here is this purple box, which I derived from the previous supply zone that we had over here over in March of 2024, because you could see hard rejection here, hard rejection, another rejection, rejection, etc., etc. Many times this is a clear supply zone, and the fact that we broke above it shows that there is a lot of strength, again, because we are above on not only the daily but also the weekly. So a retest of that would be a high probability bounce zone. Perfect risk in this case would be that gap fill, since what I just showed you, or at least what I just told you from earlier, if we do fill this gap, it leads to a lot more indecision for price. So that'd be a good stop in this case. But otherwise, as long as we stay above, this can continue on its merry way for dips to get bought, continue to the upside. So that is what I'm looking at personally. And there also is some flow to back it. If you go over here to QQQ flow from Friday, you can see here, this is a decent order for the 453 strike, just a little bit out the money, 2.1 million in premium for the 531 expirations. That is approaching. That is a short-term bet to the bull side. So this is an unusual order, as you can see here. And there are actually a couple of these throughout all of last week. If you go back here to the start of the week in the historical flow tab and filter for QQQ, I also like to filter for the weekend, at least. I like to filter for over 1 million in premium just to see the largest prints. And we can see here there was a $1.9 million print at the 450 strike back when we were at 449. So there has been some consistency here in terms of bullish orders, which has been relatively consistent over the last couple weeks and had an uptick last week. And you can see here early on, back on May 14th, we had two large orders, a 1.5 million print and 1 million print for the 5/20 expiration. So that's the expiration for tomorrow and Monday. So these had a very near-term expiration, which is a sign of aggressiveness, plus the fact that this was out the money because at the time it was a spot price of 445 to 446, and these came in above and at the ask. So these were both highly unusual. So just overall, a lot of calls throughout the week. And something interesting with these calls, if you analyze the flow from last week, the following day after they added these calls on May 14th, you can see here May 15th, they closed out of all of these calls. You can see just based on the volume to open interest, the 25,000 to 25,000, this was only part of the order, but they closed out of all these calls for a slight loss, surprisingly, because if they did continue to hold these, it's very likely they would have appreciated. However, that is the risk when you trade with very near-term expirations, because again, remember, these are out the money calls for the May 20th expiration, so that expiration for tomorrow. You have to be very careful with theta, especially for these out the money strikes. So in this case, it probably was too risky for them to continue to hold, even though, of course, it did go to fruition. They were technically right with their expectation that price would continue up. However, they weren't willing to risk continuing to hold because theta was starting to eat away as they entered a little bit later. So they did close those for a slight loss. But again, the thesis in this case for them did come to fruition. We saw some of these other calls as well end up appreciating nicely. So I would like to see a continuation to that theme going into this week, because that would show that there is demand, especially if we see that around a retest of the previous all-time high range. So I'll be looking for that this week. And other than that, though, as always, appreciate you guys watching this video, and I'll see you next time.